Hey guys, welcome back to the channel. Today we have a very special episode. You guys keep asking me if I'm going to be doing videos in Thailand, but for this episode, sort of. All right, so we're actually out here in central Bangkok, and I'm meeting with a very special guest. I'll let him introduce himself, but stick around, and I hope you guys enjoy this episode. So, Dave, welcome back to the channel. Well, welcome first off.
Thank you. I appreciate it.
He came actually here to Bangkok the first time. Well, not the first time, but we met up the last time you came here.
Yep.
And we were talking all things high yield, talking investing. You were actually the one that got me into MSTY, and I went down that rabbit hole. You were the one who orange pilled me, which is kind of funny. But we're gonna go a different route. This is all gonna be about you. So I'll let you introduce yourself and just tell the channel, tell everyone who you are.
Absolutely. Yep. So first of all, I appreciate you inviting me here. And so my name is David Santiago, and I'm the guy behind Pay Me and Dividends. It's a faceless investing channel. I never show my face on there. I just think it's kind of, I don't know. I kind of get straight to the point on my channel. I don't really have any visuals to offer, any cinematics to offer, but yeah, I'm the guy behind Pay Me and Dividends, and I'm out here in Bangkok with Eugene, and we're just hanging out, kicking it, just talking about investing and traveling and different things of that nature. So excited to be here.
Hell yeah! It's funny. Like again, I remember when you first commented on one of my videos, you're like, oh, because we met mutually through another interview that I did with Isaiah Ashley.
Yep.
And then I said, oh man, I really like your name. And then that's how we started talking.
Yeah.
And then you actually introduced me to high yield investing. You were the one that actually explained it. I watched your videos in the early days.
Yeah.
I saw you were making 60 grand a year, 100 grand a year. I'm like, damn, what the hell? And I'm looking at the portfolio size. I'm like, this doesn't make any sense.
Yeah, it's pretty crazy.
It's crazy now how the whole thing is changing. But tell me a little bit about your investing journey. How did you get started in high yield, and then where you are today?
Okay, that's a great question. So initially I began investing in 2020, beginning of 2020, right before the pandemic hit. I don't know if I can we say that on YouTube? Pandemic? It doesn't matter, right?
Yeah, I don't think so.
Okay.
I'll edit it out if anything.
Okay, yeah. So I began investing in 2020, early 2020. And initially I was very hesitant on all of my contributions because I was still learning as I went, right? I didn't really know. I really knew nothing outside of a 401k retirement account, traditional type of account that's kind of set up for you through your employer. So once I began, I was very hesitant, and I actually started off with VOO, VOO, like VOO and chill, right?
Yep,
so that's the first thing you learn of when you're on certain Reddit threads, like the Bogglehead Reddit threads, stuff like that. So at this point in time, high yield ETFs were not really a thing besides QYLD. Those are kind of the older ones. REITs were kind of the closest thing you're getting to quote unquote high yield, which is anywhere from 8 to 10%, which now with all these covered call ETFs
it's a joke.
It's a joke. Yeah, 10%.
Joke.
It's why would I invest in that, right? And so now you have ETFs that are paying 50 to 100%, and even sometimes more. But yeah, so I started off VOO, very simple. For those of you who don't know, it's just an S&P 500 ETF that tracks the index, right? And what happened is I started building my portfolio. Most of my gains were coming from contributions, and I was seeing some profit as well. But what happened is I can't really tell you exactly when the switch happened, but I do remember YieldMax coming out with their first ETF, which I believe was the Tesla covered call ETF back in 2022. So at this point, I was already about 2 years into investing, and I was mostly VOO. I did have O Realty, which is a REIT that pays 5 to 6%. It fluctuates. I had a couple other REITs and closed-end funds and things like that, but it was majority S&P 500. And when Yield Max first came out, I was extremely confused at the beginning as to how they were even generating these yields.
Yeah.
And that kind of made me look into options. Now, at that point, I was aware of covered called options. I did some covered calls back in the day, back when AMD was like $50 and $60, and it was easier to buy 100 shares to be able to do your own covered calls. So I was familiar with the idea of it, but the concept of an ETF manager taking a large sum of money and doing the options themselves, which kind of takes your hands off of it as an investor, was like brilliant to me.
Oh yeah, that was crazy, not to cut you off, but I gotta admit, I mean, I've had my share of like bashing Yield Max here and there, right? Like I've had my share, but I got to admit, I mean, they were the first of the space, to actually do the cover call for the single stocks.
Yep.
So I mean, credit is where it's credit due, right? So, but sorry, not to cut you off. But yeah, you were saying.
Yep. So yeah, the TSLY, the Tesla one, was the first ETF that Yield Max introduced, I believe. Now, I didn't put any money into that, but that is what caught my attention. And I kept tracking Yield Max for a couple more years. And in 2024 is when I really switched my strategy. It was specifically September of 2024 when I first bought into MSTY. Now, that's the MicroStrategy high yield ETF. And that, for anybody who's familiar with that ETF, I mean, this has so many ups and downs. At inception, it came out at $20 a share, like most of Yield Max original funds. Mm-hmm. And we saw highs of like 44, 45, somewhere in the 40s back in October of 2024, right before elections, when everything went crazy. Bitcoin went from like 70 to 120.
Interest rates came down. Everybody was, it was all pumping. I remember that.
It was crazy. So when I first got in September, I initially bought in around $32 a share, but I saw my position go up to 40 something a share. Jesus. And I actually held on. And those first couple months, I remember, and I was on a little bit of margin at the time. I don't use margin anymore, but at the time I did. And I had 2 back-to-back months where I made $8,000 a month.
God.
In MSTY, I believe it was October and November. A portion of that was margin, and I ended up letting go of margin. But long story short, I held MSTY for an entire year. I literally just sold out of it last month. So about 11 months I held on to that position. And to get off MSTY and kind of just go back to high yield investing in general, I went through a lot of different ETFs. I also bought into the NVIDIA NVDY, the Yield Max ETF, that basically does options on NVIDIA, synthetic options, meaning they don't actually hold the shares, but they do options on it to get that premium, and then that's how they're able to pay that big dividend. I've been in some round hill ETFs, like XDTE, a couple other ones, Defiance. I believe I had SPY for a little bit. It pays like 20% yield. So kind of coming back to my strategy now, it's actually changed a lot. So my portfolio right now is only made up of 2 ETFs.
See, and that's what I wanted to talk about, is like you kind of came full circle. Like you started off with the VU and chill, right? And then you dipped your toe and got addicted to the high yield stuff, right? MSTY and everything is paying you out all this money, right? $8,000 months, whatever. But now your portfolio is only 2 holdings, right? And you were telling me already what those holdings were. But yeah, for the audience, please tell them exactly what those holdings are.
Yeah, so my 2 holdings now are BTCI. It's the NEOS Bitcoin income ETF. Basically, the way it works is they hold a portion of Bitcoin. I believe it's around 25% of their holdings is in the HODL ETF, HODL, which is a Bitcoin spot ETF like IBIT. It tracks the performance of Bitcoin. There's nothing special to it. There's no income from that ETF in particular. But what NEOS does is they hold a portion of HODL in their portfolio. The rest of it, they do options off of like Bitcoin futures and whatnot, or whatever's available to them at the time. And that's how they generate their income. And then my other ETF is SPMO, which does not pay a dividend. If it does, it's like 0.5%. And it's a growth ETF. But I do want to talk about this ETF because it's different than your regular like VOO or QQQ that is tied to the index. SPMO is tied to the index. It is an S&P 500 ETF, but the difference is it takes the high performers based off of some sort of formula or strategy that they've came up with that is momentum from the momentum index.
Yeah, highly volatile. Yep.
Highly volatile.
So it's kind of like a hedge fund in a box.
Sort of.
I'm just, bro,
something like that.
It's like
sounded good.
The OT crowd is going crazy right now. Like,
yeah, I know, right?
It's another hedge fund ETF. Like,
I know, right?
I rash too much on OT, but anyways, I'm sorry to cut you off.
Yeah, OT's nuts too. But SPMO is cool. So it doesn't pay a dividend. It is a growth ETF, and what it does is it's a momentum ETF, and it takes 100 companies out of the S&P 500. In order to prioritize growth. And what I found, what really gravitated me towards this ETF is the fact that when you look at the S&P 500 as a whole, all of those companies meet a certain business criteria to be included into that index. But not all of them necessarily perform well on the charts. Doesn't mean that they're a bad company, but just some companies don't really pick up with the market. What SPMO does is it kind of takes the best of the best and filters out the stragglers and prioritizes that performance. And there's an actual index tied to it, the momentum index, which is an index in itself, which I didn't know about until finding this ETF. And I realized that, there's an index that's like over 10 years old that this is based off of. So it is based off their own criteria, but there is an index for it, which for me feels a little more, structured or a bit more.
I like when ETFs have an index, like an underlying index.
Yep.
It's market cap weighted, or it's there's no magic behind it. It's following an index, right?
Yep.
Whereas there's the thematic ETF where it's like it's up to the fund manager to pick and choose, and the ETF is only as good as those picks.
Exactly.
Right? Like it's only as good as those picks. So I totally get it.
Yep.
All right. So now you went full circle. You kind of went from the VOO and chill.
Yep.
And then you went to high yield, and now you learned something, right? This is why you only have two holdings now. You only have SPMO, which is an index basically, and you have BTCI.
Yep.
So tell me what turned on in your brain that made you decide, you know what, I don't need all these high yield, because I remember your portfolio, you had a bunch of them. You had AIPI, you had NVDY, you had MSTY, you had a couple other ones, and then all of a sudden you disappeared right when we all needed you.
I know, right?
And then you came back and you're like, I only have two holdings now. It's like, whoa, what happened here?
I have nothing to talk about on my channel anymore.
So what happened? Like what turned on in your brain where you're just like, I figured it out?
Okay. So, pretty much what happened is, so I got a real life trial and error using these ETFs. Like I said, I held MSTY for almost an entire year, which in the grand scheme of things isn't very long, but it's enough to kind of collect some data and analyze your positions and see if how you want to move forward. And I made a lot of income off of MSTY, but my principal went down. Now, is this going to happen with every ETF? No, but I've gone through enough high yield ETFs to see the trajectory in most of them. I also sleep a lot better at night, keeping things simple. And I think lastly, I don't need the income right now. And so I was looking at it from a tax perspective, which I'm not going to get into that because everybody's tax situation is different. But I was looking at it personally from a tax perspective. And I was also looking at my total return. Now, when I sold out my position of MSTY after a year, I was up close to 10% total return. Now, and that's counting dividends, obviously. My principal, remember, I started off at $32 a share as my cost basis.
Yeah.
I eventually got it down to around $27 a share. But when I sold out, MSTY was around $19 a share. And I had around 2,300 shares, I believe. So you can do the math. I was down a lot on principal.
I think it's $15 a share, $16 a share nowadays. Like
Yeah.
it went down a lot, but I mean, MicroStrategy went down a lot too.
Exactly.
So
Yeah, it all depends on the underlying asset. But yeah, I mean, I was looking for a way to grow my portfolio during a time where I don't need the income. And SPMO really did it for me because I did a comparison to the actual S&P. Let's say, VOO, VOO, or SPY, or even QQQ. And SPMO has outperformed all of them since inception. SPMO has been out since 2015. So we have a 10-year, track record to see how they've performed.
so why BTCI? Why not just hold IBIT or actual Bitcoin? If you made this transition away from MSTY, which is the queen of the altar for MicroStrategy, / Bitcoin exposure.
Right.
Why move into BTCI now? Of all ETFs that are out there. So I'm curious is all.
So that's a good question. There's a couple things. I think the first one is I like looking at the ETF manager. Neos has a suite of ETFs like SPY, QQQI, BTCI. They have a real estate one as well, a REIT. But what I like about Neos is they've been around for a bit longer than some of these other newer companies. They actually, there was an ETF called NUSI, NUSI.
Oh, yeah, NUSI, yep.
And that was, I believe this was before they changed their name to Neos, but those were the same fund managers.
Oh, damn. I didn't even know that.
Yeah.
Oh, wow.
Yep.
Okay.
And NUSI's been out for, I would say, maybe close to 10 years or more than 5 at least.
Yeah.
So it not to say I'm not promoting NUSI because I don't I'm it's not an ETF that I would invest in, but that just goes to show that it has a long history. So that was number one. Number two is the fact that they do hold a portion of Bitcoin in their portfolio through a spot ETF, which means that you're going to capture some of that growth on the upside.
Yeah.
Now, to answer your original question, well, why don't I just put all my money in the IBIT or Bitcoin itself? This year to date, BTCI is actually outperforming Bitcoin total return. If you look at, dividends included, I think long-term IBIT will still outperform because, BTCI is only less than a year old.
Yeah.
But I kind of look at it this way. I still want to generate income. Neos is very tax efficient the way they write their contracts. I believe it's like a 1287 options contract or something that makes it extremely tax efficient. And also, I think I get peace of mind knowing that at any time I can turn the drip off, and I'm still making a decent amount in BTCI. I'm up around $1,000 a month in BTCI just in passive income. Now I have that on drip. Automated reinvestment plan, but I do feel comfortable knowing that at any time I can take the drip off and use that income, and the principal isn't really going to erode because it's still kind of keeping up with Bitcoin.
Yeah. So you got out of high yield, and I hate to say it because this is like the most controversial freaking topic. It's still the most controversial topic. Yeah. Some people believe it, some don't. It's the flat Earth theory, right? Whether you believe it or you don't believe it. But NAV erosion, this always comes up in all the communities. NAV erosion, right? And it's funny, I did a video, and there were so many comments saying they're all getting out of a certain fund. I'm not going to say who, but they're all getting out of a certain fund because the NAV erosion's so bad, the principal erosion's so bad, whatever. Yep. And they're all moving to, some of the ETFs that I hold and the fund manager that I usually mess with. All right, I'm not promoting them, by the way, but it's funny, not funny, but it's interesting that you came to this conclusion. Like you were heavy in the high yield. You were heavy into it, and now it's
my entire portfolio at one point was just straight high yield. I didn't have VOO, nothing. I mean, the The only like regular index fund I had was like my 401k or, you know, retirement accounts. But yeah, my entire like individual brokerage account was just, I was just worried about pumping out income. And it worked. It worked. It worked
until it didn't.
It worked until it didn't. And again, it was one of those things where total return, I was still up on MSTY when I sold. My thing, I was asking myself, how long is this ETF going to last? How far down can MSTY go? And when a point in time is going to come where I'm going to need that income. Right now, I don't need the income, but my entire goal is to eventually build enough in my portfolio to be able to use that income. And a question I had to ask myself is, how happy am I going to be having to reinvest a portion every time I get paid, and then divvy out a portion to pay bills, divvy out a portion for taxes? It seems like a lot to manage. It really isn't if that's your full-time gig. It's actually pretty fun, I would suspect. But if you don't need the income, is that really necessary, you know, to put that tax obligation on yourself, to constantly have to reinvest just to stay afloat? You know, it's also kind of a mental thing, because now when I log into my brokerage account, it's always green. Granted, the market is green, but with SPMO, I pulled up my lots, and I was showing you my lots the other day of remember. Every time I purchased SPMO over the last month, it's just been going up, and I've only held it for a little over a month. So again, I think my strategy now is mostly growth. BTCI still gives me growth. It still gives me peace of mind knowing that I'm still making money.
You're not eroding your capital.
I'm not eroding my capital.
You can turn off the drip and use the money.
Exactly.
So that is really cool. Like, again, there's so many people that are starting to come to that realization where uncapped upside makes a difference, you know, along with distribution income. Like, nobody's, a lot of people, I'm not going to say everybody, but a lot of people are starting to wake up to the fact that, like, total return, yes, you can use that argument, especially when it comes to the ETFs that are, you know, kind of going down, eroding, decaying, whatever you call it. But they're starting to wake up and be like, I don't even want to touch those things. Like, I want to protect my principal, and I want to make a high income. I want my cake, and I want to be able to be skinny at the same time. Like,
absolutely, yeah.
But let's switch gears here. So you live an interesting life. I'm not going to blow your spot up here. But you live an interesting life, similar to me, right? Been traveling. You know, you live outside of the United States. All right. So let's get into that. Let's talk a little bit about, I mean, you've been up and down Southeast Asia. You've been, if I'm not mistaken, you told me about Vietnam. You've been to Thailand. You've been to the Philippines. So, I mean, tell me, like, where do you see yourself once work, you know, kind of concludes for you? Like, where do you see yourself? You know, how's the travels been? What is the cost of living like, especially for like this Southeast Asia? What's attractive about these areas? So,
no, that's a great question. To start off, I've been living overseas now for about 7 years, close to 7 years now. And I've been going through Southeast Asia, you know, just hanging out when I have time. And I mean, what attracts me the most is the obvious, right? The culture. It's like that meme when your bro says he's going to Thailand for the culture. I'm here for the culture. Okay. but seriously though, it is, the culture is super laid back. You know, it's always a good vibe here. It's hard to even pick which country is my favorite because I love them all. But Thailand is super, super dope. I really enjoy being in Thailand. And I mean, it's just a different experience that you get in the U.S. I love the U.S. There's so many opportunities there. And I'm super grateful to be an American. I want to say that, first of all, because, I mean, just the fact that we have the passport we do gives us the ability to get all this exposure in different countries, not having to get visas like a lot of people and things like that. So I'm super blessed.
Through hoops, bribing the passport people. Slipping an extra 20 in the mail.
It's real, man. So I'm definitely blessed and grateful to be in this position. And Southeast Asia is just always a vibe. It's always good weather. I mean, it's hot as hell during the summer, but you know, you get good weather, you get really good people. Thai specifically, although I haven't lived here, I've been here many, many times over the past 7 years. and they're always super chill, very welcoming, very warm people. And it's just, and you meet other expats as well who are like-minded. You know, you'll meet a lot of characters out here for sure.
For sure.
But
yeah, for sure.
You know, if you move around enough, you'll meet a lot of characters. But you meet people who are like-minded, who are trying to live this financially free type of lifestyle, this flexibility that it gives us. And yeah, my initial plan was to move overseas for a year and just work, save up money, go back to the US. And then the pandemic hit, and I was like, maybe I'll do one more year. You know,
that's how it starts. They get you.
Maybe I'll hang out just for another year, right? It's gonna go by quick. I'll be home in no time. And you know, almost 7 years later, I'm still overseas. And yeah, I've probably been to 10 or more countries, some of them multiple times. And yeah, I really enjoyed it. I don't see myself not living overseas.
Could you go back to the States right now? Like, if say you had no job, and it's like, all right, you have one option: either go back to the States, pick up where you left off, or try to figure out something to make it work out here. What are you gonna do?
That's a great question, and I think about that all the time. I think all expats kind of goes through their head every once in a while, but I wouldn't be opposed to going back to the U.S. I would definitely have an escape plan to leave within a year of being there, to be honest with you.
Yeah.
I wouldn't want to tie myself into anything there. I would go for an opportunity, work, get to where I need to be, then get back overseas. I think I could pull it off on my own, living overseas, if I didn't have a job right now. I think I could figure something out. I'm a decent steward of my money. I think I could hold myself down for a while until I figure out the next opportunity. But if I had to, I wouldn't be opposed to it. I think it would be easier now. Well, it's a double-edged sword. It would be hard going back to the U.S. mentally.
Oh, yeah.
Because you're so used to being
I'm
overseas.
so acclimated to being outside the United States. Like, it's hard for me to even go back to the States.
Yeah.
Because, you know, outside, everyone's kind of, like, you know, everyone's just nice. Everyone says good morning or something. They acknowledge you. But back in the States, it's like, what do you want? Like, if you say good morning to somebody, even getting a coffee, like from a Dunkin' Donuts, it's like, good morning. Yeah, what do you want? Damn, bro. Like, shit. Yeah. Excuse me. I'm, you know, good morning. First off, you know, the manners and everything just kind of went out the window.
Yeah.
Okay, so let's talk about, like, financially or your financial FIRE plan, you know, financial independent, retire early, that kind of thing, right? Because I think that resonates with a lot of people. That's why people get into the high yield space. Yep. That's why people invest, right?
Yep.
So talk to me a little bit about that. Like, I know you gave me your story earlier, but let me rephrase this. If you had to give some advice to, like, someone who's just starting out, had no idea what investing was, maybe they might even have, you know, a couple dollars in some random mutual funds or some, you know, bad stocks, or maybe they're just starting out and they're like, you know, they want to get into the cover call ETFs because it's paying out so much money. Like, what advice would you give them?
That's a great question. I think starting off, let's assume this person is in the U.S. or just their home of origin, and they want to live a financially free life. I would say first things first, make sure you're out of debt. I'm going to get little Dave Ramsey on him.
Oh, baby.
Get out of debt first.
Little Dave Ramsey.
Just a little Dave Ramsey.
Okay, baby steps, let's go.
Baby steps, you know. And I think that's important because, you know, the reason we're able to live this lifestyle, especially you living in Thailand full time, is the flexibility. So I would say don't be held down by any debt. Make sure any obligations you have, you take care of them. Some people have children, some people don't. Like, these are real things you got to think of, right? Some people are married back in the States, things like that. So make sure your obligations are taken care of, your debt is clear. And as far as investments go, let's say you have $1,000 or $5,000 to start off with. Realistically, you're not going to be able to generate much income off of that to sustain a lifestyle. So I would advise anybody starting off to really build their portfolio to a place where they have $40, $50, $60, $70,000 and more, to where you can realistically generate some income off of it, because you don't want to shoot yourself in the foot early.
That getting to that first 100K, that's the bitch. All right,
That's the one
I'll
right
say
there.
It's my channel.
Yeah.
But yeah, getting to that first 100K, that's the bitch. Like, that's the hardest part. But
Super
once
difficult.
you get there, it just compounds like crazy.
It does.
But like, how would you? I don't mean to cut you off, but like dividend investing, growth investing, you know, like which one should people start off with? Should it be a combination of both? Like, what should people start off with, given their, you know, like, I know everyone has different circumstances, but, you know, kind of like talk to that. Like what would people start off with, or what should they do?
Based off of my experience, I would tell people to start off with growth first. I started off with growth, and truth be told, if I would have just stuck with VOO, looking back at it, and kept contributing like I had been, my portfolio would probably be way bigger now.
Yeah.
But because of that switch to high yield investing, which I'm glad I did that, because I experienced it for myself, and eventually I'll make my way back over there a bit more strategically, a little more tactically next time. But I think you should start off with growth, get to a point where you have a big enough principal, and then you could start taking some of that money and shoving it towards a high yield ETF so that you can pay your bills. So I definitely would say growth in the beginning. And like you mentioned earlier, that first 100K is a bitch. Like I think Charlie Munger said that.
Yeah, Charlie Munger, yep.
And that's true. I mean, it took me, I've passed that point with all my accounts combined, retirement accounts, individual brokerage and everything. It took me almost close to 5 years to break that first 100K.
Yep.
And that was with messing around and tinkering around with my portfolio a lot. If I would have let it sit still, it probably would have been a shorter time period. But I say that to say that it does take time. It's not going to take a year or two unless you're making massive amounts of money and you have zero expenses and you just do nothing. You don't go out or do anything. But realistically, it's going to take you time. Don't rush it, but try to bring your expenses down. Try to stay out of debt and really focus on what it is you want. When you know the vision is to eventually break free and be able to sustain yourself,
Hell yeah.
You'll make changes, the necessary changes that are needed to accomplish that goal. But it is going to take time. And yeah. Oh, well, talking about that, so what do you think about real estate? I don't want to be the interviewer now, but I kind of want to compare it to high yield investing. And the only reason I bring that up is because, so I look at high yield investing as these ETFs are almost like tenants, and they're paying you rent, except you don't have to worry about toilets and being a maintenance man or paying a property manager, and they're taking a cut of your tenants' rental income. And so I think the reason I bring that up is because if people specifically want to live this lifestyle where they're able to travel and have that flexibility, I think having most of your money or most of your net worth in brokerage accounts that you can access from anywhere in the world, you can pull out that quote unquote rental income or high yield ETF income and be able to pay your expenses that way and not be tied down to a mortgage or property taxes and things like that. So
the liquidity is so much better, like
exactly
100% better. Like, and you know, I laugh every time people compare the high yield stuff to like rental properties, because that all started. There was what was his name? The Curve CEO. He said it. Jay Petrocelli from YieldMax. He said it. I think he started it actually. But everyone's like, "Oh yeah, look at these as rental properties." No, rental properties don't erode in value. Right?
That's true.
But I mean, but you know, all things considered, like you're not dealing with the 3 T's, tenants, toilets, trash. Right? That's why I've met more investors, more real estate investors who turned into REIT investors than I have met REIT investors who turned into real estate investors. But yeah, you're absolutely right. If you want to come out here and live this lifestyle, live, you know, a lifestyle of, you know, financially independent or not needing a job. It's not that you don't have to work, right? Work is optional. If you want to work, if you want to do remote work, that's perfectly fine if you love your job. But yeah, you definitely want that money to be absolutely liquid. because
Yep.
if you need it in a pinch, you can't just pull money out of a damn rental property, right? You can't shake your property manager down for pennies. But yeah, you're absolutely right. You get those steady checks coming in every week, or now it's twice a week with Defiance.
Yeah,
right. Defiance
I see
has
that.
twice a week now.
Yep.
But yeah, you're absolutely right. You want that. You want that easy, flexibility, liquidity, ability to get that money as soon as you want. So yeah, I mean that's how I view. That's how I view, because I was heavy real estate, but now I'm like more stock focused now, more stock investing focused.
Yeah.
So, cool, man. So we learned a lot. Like we went through how you got here, or how you got to your portfolio.
Yep.
Full circle. Went from growth,
Yep.
high yield, and back to growth.
And back to growth. Yep. Full circle.
Full circle.
Yeah.
And it's funny because there are, like, I try to mention this in videos, is that people should not ignore growth in their portfolios, right? They shouldn't. They need to include growth. They need to think about that stuff. You can't just have a portfolio full of just cover call ETFs. I mean, if you're a multimillionaire and you don't give a crap about your money, then sure, do your thing. But for a majority of us, you need to think about the principle. You need to think about growth. You need to think about portfolio size, right? And all that other stuff.
Yep.
So you thought about that, you got out of the high yield stuff. Now you're back to growth. Where do you see yourself in the next couple of years? Are you going to be work optional, or are you going to be living out here in Thailand, Vietnam, the Philippines, maybe somewhere else? Like what does the next 5 years look like for you?
Yeah. I don't know. I'm kind of taking it day by day. I'll definitely be overseas. That's the plan, is to stay overseas. I've been overseas for so long now. I can't see it any other way. But yeah, I definitely plan on being work optional. I'm not in a rush to get there, because I'm still young and I want to make sure my net worth is padded out as much as possible before I make that jump. But yeah, in a couple years, we'll see where I am. I may travel. I may bounce around from country to country months at a time, and kind of see what I like most. Because as you know, going on vacation and living somewhere are two completely different things. But I could definitely see myself living in Thailand. It's a very soft landing. It's super and easy to transition to
integrate, like
to assimilate. It's super easy. You meet super cool people. The Thai people are cool. It's a vacation spot, so there's always people coming in and out. Things are very affordable. So it's a super easy place to assimilate to. So I could definitely see myself being here long term. But yeah, I'm just exploring some more, still contributing to my investments, and that's it. Yeah, I mean, that's really it,
And you guys heard it here. This is exactly what we need more of, right? We need more people investing, more people getting options later in life, all right? This is living proof right here that you need to start investing, right? It doesn't have to just be high yield ETFs, right? It could be anything. It could be a mix. It could be a balance. It could be, primarily growth, whatever. But that is awesome. Well said. I think we're going to call it here, guys. Our cigars my cigar is pretty much done, and we got to get some food ordered. But do you have any parting thoughts before we end this episode?
Yeah, first of all, I appreciate you having me on the channel. Also, I don't know if you want me to plug my channel in there as well, but again, I'm Pay Me in Dividends. It's a faceless channel. Maybe I'll start showing my face now that you guys know who I am. But yeah, I talk about investments, kind of like Eugene. We have similar strategies. Some are different, some are the same, but I think they all overlap because of our goals.
Yep.
If you're invested, it all kind of overlaps. So, but yeah, I appreciate you guys checking this out, and yeah, that's pretty much it, man.
Pay Me in Dividends, everybody. I'll link his YouTube down below in the description. Be sure to check him out.
Yep.
All right. And again, it is always a pleasure to meet other investors out here. Like, a lot of people come out here for different reasons, but it's just something so special to talk to other investors, like face to face, have those conversations, right? Not every day is about talking about going to the bars and buying up bottles at the club or sitting on couches, right, and smoking cigars. It's just those conversations, the investing conversations that I truly enjoy.
Absolutely.
So, With that being said, guys, hope you enjoyed this episode. I will see you guys in the next video. You guys take care.